What should you know before investing in cryptocurrencies? Cryptocurrencies have become one of the most talked about investment opportunities of the last decade. From Bitcoin and Ethereum to thousands of newer digital coins and tokens, the crypto market offers the potential for massive gains, but also carries significant risks. Before you invest, it's important to understand what cryptocurrencies are: decentralized digital assets that use blockchain technology to record transactions securely and transparently. Unlike traditional investments such as stocks or bonds, cryptocurrencies are not backed by governments or physical assets, and their value can fluctuate dramatically in short periods of time. This volatility can create opportunities for profit, but it also means you could lose a large portion, or even all, of your investment quickly if you're not careful. Cryptocurrencies have evolved from an obscure concept discussed in niche online forums into a multi-trillion-dollar global market that attracts institutional investors, tech innovators, and everyday Americans alike. Bitcoin, the first cryptocurrency, launched in 2009 as a decentralized alternative to traditional money. Today, there are over 20,000 different cryptocurrencies, from large players like Ethereum and Binance Coin to niche projects targeting specific industries. The appeal is obvious. Crypto offers the promise of high returns, decentralized control, and new technological possibilities. But it also comes with one undeniable truth: this is one of the most volatile and risky investment arenas you can enter. Prices can skyrocket 200% in a month and crash 80% in a week. For anyone in the United States considering entering this market, preparation, education, and caution are not optional, they are essential. One of the first steps for any potential investor is education. Learn how blockchain works, the difference between coins and tokens, and the role of exchanges where you can buy and sell these assets. You should also familiarize yourself with concepts like market capitalization, liquidity, and transaction fees. Security is another critical factor. Cryptocurrency transactions are irreversible, so if your digital wallet is hacked or you send funds to the wrong address, there is no way to recover your money. Using reputable exchanges, enabling two-factor authentication, and storing assets in hardware wallets can greatly reduce your risk of loss. Another key point is regulation. Cryptocurrency laws vary by country and can impact your ability to trade, use, or report profits from these investments. Understanding what you're buying. A cryptocurrency is a digital asset secured by cryptography and powered by blockchain technology, which is essentially a transparent and tamper-proof public ledger. But not all cryptocurrencies are created equal. Bitcoin aims to be a store of value, like digital gold. Ethereum powers smart contracts, self-executing agreements that have enabled decentralized finance, DeFi, and NFTs. Stablecoins like USDT or USDC aim to maintain a one-to-one value with the United States dollar. Meanwhile, meme coins like Dogecoin or Shiba Inu are driven more by community hype than by fundamental technology. Knowing which category your investment falls into is crucial, because the risk profile, use case, and potential return vary wildly. It's also important to note that in the United States, cryptocurrencies are not legal tender, meaning they're not recognized as official money, and they are not insured by the FDIC like your bank deposits. This means if an exchange goes bankrupt or your wallet is hacked, you might lose everything with no recourse. We've seen this happen with major companies like FTX and Celsius, where billions in user funds vanished almost overnight. That's why understanding the platform or wallet you're using is just as important as understanding the asset itself. The United States regulatory landscape. Unlike many countries that have clear rules, the United States crypto regulatory environment is still evolving. Agencies like the SEC, Securities and Exchange Commission, and CFTC, Commodity Futures Trading Commission, are still deciding how to classify certain digital assets. Are they securities, commodities, or something else entirely? This uncertainty means that laws could change rapidly, affecting how you can trade, invest, or even hold certain coins. For example, the SEC has been cracking down on unregistered securities offerings, and exchanges that fail to comply could be shut down or fined, leaving investors unable to access their funds. Additionally, crypto gains are taxed in the United States, meaning if you sell a cryptocurrency for more than you paid, you owe capital gains tax, even if you immediately reinvest the money. This is a detail many new investors overlook, and the IRS has increased its focus on crypto transactions in recent years. Security comes first. Unlike a bank account, cryptocurrency holdings are entirely your responsibility. Once a transaction is sent on the blockchain, it's irreversible. If you accidentally send Bitcoin to the wrong wallet address or fall for a phishing scam, your money is gone forever. For this reason, cybersecurity is critical. Best practices include: 1. Use hardware wallets like Ledger or Trezor to store large amounts of crypto offline, away from hackers. 2. Enable two-factor authentication, 2FA, on any exchange or wallet you use. 3. Never click unknown links or respond to unsolicited messages offering investment opportunities. 4. Keep backups of your private keys in a secure, offline location. If you lose them, you lose access to your crypto permanently. In fact, studies suggest millions of bitcoins are lost forever simply because owners misplaced their private keys or forgot their passwords. Treat your crypto like you would treat gold bars. It's your responsibility to safeguard it. The role of exchanges. Most Americans buy crypto through centralized exchanges like Coinbase, Kraken, or Binance, US. These platforms are relatively beginner-friendly and allow you to link your bank account to buy coins directly with United States dollars. However, exchanges are also vulnerable to hacking, technical failures, and regulatory crackdowns. A safer long-term strategy is to use exchanges only for purchasing and selling, not for storage. The phrase in the crypto world is, not your keys, not your coins. If the exchange holds your crypto, you don't truly own it. You own an IOU. Moving your funds to a personal wallet you control is a safer practice. Investment strategies for Americans. The most successful crypto investors typically follow a few key principles. 1. Don't invest more than you can afford to lose. This is not an exaggeration, crypto prices can collapse overnight. Treat it as a high-risk portion of your portfolio. 2. Diversify. Don't put all your money into a single coin. Spread your investments across different types of crypto, some for long-term holding, Bitcoin, Ethereum, some for potential growth, emerging projects, and maybe a very small portion for high-risk speculation. 3. Use dollar cost averaging, DCA. Instead of trying to time the market, invest a fixed amount at regular intervals, weekly or monthly. This smooths out volatility and avoids panic buying or selling. 4. Stay updated. Crypto markets are influenced by news, regulations, and technological developments. Follow credible news sources, join educational forums, and track official announcements from projects you're invested in. Comparing to other countries. Many developed nations, such as the United Kingdom, Germany, and Canada, have clearer regulatory frameworks for crypto, which can make investing there more predictable. Some countries even have tax incentives for long-term holders. On the flip side, others, like China, have banned crypto trading altogether. The United States sits somewhere in between. The government has not banned crypto, but it is tightening oversight. This balance between innovation and regulation will shape the future of crypto investing in America. Final thoughts. Cryptocurrencies can be an exciting addition to your investment portfolio, but they require a different mindset and much more personal responsibility than traditional investments. The potential for high returns comes hand in hand with extreme volatility and the risk of losing your entire investment. For United States citizens, the path to success in crypto involves education, security, diversification, and compliance with tax laws. In short, learn before you leap, secure your assets like your financial life depends on it, because it does, and approach the market with both optimism and caution. The opportunities in crypto are real, but so are the risks, and the investors who succeed are those who respect both equally. Finally, have a clear investment strategy before you enter the market. Decide how much you can afford to lose without impacting your financial stability, and avoid investing based solely on hype or fear of missing out. Many successful investors treat crypto as a small portion of the diversified portfolio rather than their primary investment. Consider using dollar-cost averaging to buy over time instead of making one large purchase, which can help reduce the impact of volatility. Keep track of your transactions for tax purposes, as crypto gains are taxable in the United States and many other countries. Most importantly, stay informed. Cryptocurrency is a rapidly evolving space, and keeping up with news, technological developments, and market trends will help you make better, more informed decisions. The economy affects everyone, including you. But do you actually understand it? For example, why do prices keep rising? Why are some countries rich while others stay poor? Why does your paycheck never seem to be enough? What can you do, personally, to change your financial future? This ebook is exactly what you've been looking for. Understanding Economy: How You Can Improve Your Life is an excellent must-read ebook to help you improve your life. What this ebook will teach you: how the global economy actually works, in simple and practical language. The real reasons behind inflation, poverty, inequality, and wealth. The truth about capitalism, socialism, government spending, and taxes. Why some people escape poverty, and how you can too. How to start your own business, manage money wisely, and protect yourself in tough times. Why crime, corruption, and bad leadership destroy a nation's economy, and what honest people must do. Why sustainability matters, and how a strong economy can exist with a healthy planet. The secrets behind economy, cost of living, interest rates, and personal wealth building. How to take control of your financial life, no matter where you start from. And much more. Many people are buying this ebook to better understand how the economy works, and thus improving their lives. This is not a boring academic textbook full of formulas. It's a practical guide written by me who believes that economic knowledge can empower everyday people. This ebook has about 480 pages, explained in a simple way so that everyone can understand economics. This ebook is perfect for you. Can you please buy this book, and at the same time strengthen this channel? It's very cheap. Take control of your future. The purchase link is https://bit.ly/understandingeconomy. As soon as you make the payment, you can instantly download this excellent ebook. And you can start reading it and benefit greatly. Very easy. A small investment that will transform how you think, act, and thrive. Don't just survive the economy. Understand it, and use it to totally benefit you. Could you please buy the ebook, like this video, write your comments, and watch the other videos of this channel? Thank you very much for watching this video.